Rivers of Babylon, where he sat down, and there he went, when he remembered Zion. For the wicked carry us away captivity, require from us a song. How can we sing King Alpha's song in a strange land? So let the words of our mouth and the meditations of our hearts be acceptable in thy sight, O Lord. I don't know if Ham's coming on. I didn't talk to him. He's welcome, of course. I think this news might be something he was on top of. Yesterday, Saturday, March 29th at 4 o'clock, GiveBucks announced or clarified, I guess, its $212 million strategic investment. They're going to commit $212 million to an asset-based investment vehicle. A publicly traded super app and charitable giving platform today announced the intended sale of a 30% equity stake in the company, GiveBucks, for $212 million. The transaction is designed to be completed through a non-dilutive structure in order to protect and enhance long-term shareholder value. Let's just look at that again. A non-dilutive structure. A non-dilutive structure. All right, so I guess the rest didn't come up when I tried to save it, so let me just read it to you. It's not very much more, by the way. The key point to make is this was announced yesterday and it's non-dilutive. But let me just read the remainder of the story to you. As part of the transaction, $212 million will be invested into an income-oriented strategy. In other words, they won't ever have to go to Wall Street, ever. Managed by a credit asset manager. This multi-year commitment is designed to produce consistent cash flow to provide funding to GiveBucks to support the overall expansion of the company. and its platform. The majority shareholder of GiveBucks, has voluntarily agreed to retire a portion of their shares to minimize dilution to shareholders. And there will be an 8K filing, which is not there yet. So let me see. There was one other thing I wanted to show. Here it is. This is GBUX, according to OTC Markets. This is GBUX's, well, see, the float is several different numbers. On Yahoo, they show 24 million. Here they show 14 million. And I've heard the float is as low as something over 2 million shares. Let me see. The last time I made notes on it, I heard the float is 1.2 million shares. 1.2 million shares. Of course, that's, you can't really confirm that. The authorized shares are 110 million, and held at DTC is 6 million. There's the restricted shares, 80 million, and that's what's going to be given up to give this investor 30% of the company. So they owe us a 8K filing and maybe a further announcement explaining that filing. I don't know. But with a 1.2 million share float, and my understanding is there is a naked short of 2.4 million shares, according to Tom Ronk. I didn't speak with Tom Ronk. I got that information fourth hand. And just a trap short. So GBUX might be a stock on Monday morning, tomorrow morning, to watch. If you own it, I have such a tiny position. 325 shares I have in my IRA. But I think my decision tomorrow morning, I don't have an open order on it. My decision, do I go for it? And there was a stock, Holo, I think it was. Let me see. There was a stock that had a squeeze. I think it was Holo, Holo. I don't know. Let me just look. Who do you think you're fooling? I might be wrong about that. Yeah, that's not it. Oh, maybe that is. The problem is it's done reverse split since, but it went from $31 to $2,000. So I don't know what the reverse splits were to make that, but it was on very low volume is my point. So I don't know what I'm going to do with GBUX tomorrow. If I'll go, is such a small position, I might just put out an order at a high number. I tend to use the Fibonacci sequence, not for anything other than, hey, if there's patterns in the flight of birds, patterns in the universe, patterns in numbers, maybe there's patterns in how people trade stocks. I don't know. So I might put it out at 144, or I might put it out at 89. Those are the two numbers, I think, by memory. 100 is a logical place. If it does really run, there'll be a lot of orders in at $100. So that's the greedy part of me. The conservative part, if you have a big position in GBUX, I wouldn't go for the big numbers. I would just take what you can get in terms of the easy money, 10, 15, 20, 25. And if you miss the rest, well, next time, because the last thing you want to do is have a large position, not take advantage of any kind of buy-in. That's what I think could happen with GBucks, GBUX, is they just announced, as I read to you, $212 million in financing, or I guess you call it commitment, but they're exchanging 30% of the company from existing shareholder, not newly issued stock. And then they're going to put that 200 million in income. I mean, let's say they get 5%. I'm sure that's low. That's 10, 12. They can make $1 million a month cash flow covering all overhead, and still have the cash to make acquisitions if that's their goal, to grow, quote unquote, grow their app. They are going to file an 8K, so there may be another press release associated with that. I don't know their policy. But you've got a trap short, in my opinion, and you've got a small float, just over 1 million shares in the float, a trap short for 2.5 million. I'm exaggerating both of those slightly, just to keep the story simple. And you could get this stock moving tomorrow morning. So that's why I came live, is you got to make your own decision. If you own the stock, how are you going to sell it? The other question is how many days do you have to sell? I don't know. It's been so long since people have taken a win. I'd be inclined just to take the profit tomorrow, whatever it is. But this company clearly, my observation about this company, one is kind of neutral, which is, who knows, that's not a large short position, but for a stock that trades 5 or 10,000 shares a day, that is a large short position. There's one idiot short apparently trapped, and the company seems to understand totally. Do not raise money in the United States of America. Do not go to the U.S. capital markets. Otherwise, your market cap will be slaughtered. Like, for example, real estate, resource plays, everything to do with anything technology is what we used to call it, but all this, or high tech, all of the things that used to make America great, they all get destroyed by a handful of greedy, cowardly scumbags. And so it's clear to me that GBucks understands this, and my guess is, as they move forward with their business plan, they're not going to make a wrong step. So GBucks looks interesting. Phil Zill, oh, what a puppy. What a puppy. How can you resist not picking that puppy up? Violating that puppy's personal space, picking her up and saying hello. I think GBucks has a chance. Look, the criminals in a normal situation and their computers, any news story, they're going to hit it with selling. But in this case, what are they going to sell against? As far as I can tell, there's no toxic note out there. There's no warrants out there. There's no at the money offering. There's no Jeffrey Lind. There's no Kurt and Seth. There's no Ari. There's no Anson Funds. There's no Goldman Sachs. There's no Adina Friedman. There's nothing like that. So I think tomorrow morning, GBUX could open, gap open, and we might be seeing a short squeeze in motion tomorrow. Who knows? If the computers put selling pressure on in the morning, you have a choice. You can say, you know, William is full of crap. I'm nervous. I'm going to just sit here and watch it. Or you might take the pullback in the morning as a chance to buy shares down if they give you that gift. I think there has to be at least one more news event, which is the 8K. And once the 8K is filed, there'll be clarity. And I think you could see a situation in GBUX where the two things that I think are required to cause squeezes. One, something comes out of left field, or something comes so big that it surprises the criminals and they don't have time to scurry under the refrigerator or under the oven or under the dishwasher like cockroaches they are. The other thing is if the price just starts going up, the prime broker will call and say, hey, dudes, we're not going to carry you. And these greedy bastards, they're not going to, their money's all in their wife's name. They're probably out of Florida where they have their home protected from bankruptcy. And they're not going to put any money in at risk. So you could see buy-ins. And imagine, I don't know, just imagine all the people living in peace, you may say. Just imagine if you have to cover, the number I have written down here is 2.4 million in naked short on a stock that trades 10,000 shares a day, and you have to do it all in one day. How high could that go? I don't know. GBUX might be the one. You're right, Phil. So, would you still buy tomorrow? Will you still love me tomorrow? Tonight? Benjamin, I think it all depends on price. If they sell it down out of the gate, I would buy. So in other words, where did it close? 520 or something? I don't remember. 602. So it closed at 602. If they sell it off, I would buy more in the morning. But remember, this is a trade. When you're doing something like this, it's not, you're not taking the time to study the fundamentals, although I have a feeling it could turn into a fundamental story very nicely. So anyway, if the stock pulls back in the morning because they're going to try to convince you by selling stock that this is shitty announcement. This isn't a bad announcement. $212 million strategic investment, non-dilutive. An existing shareholder is giving up stock. The way I read that is the existing shareholder must be aware of a large short position. And they also must be aware of what's coming. Because you give up that much stock, you're doing it to make money, not to be Sister Mother Teresa, although some people have their opinions of her. If the stock opens up tomorrow, Benjamin, at the open, I don't know. Let's dream. It opens at 9, gaps open, and starts to run up. I'm not sure I'd buy into that because there's a lot of risk. What I would do maybe is watch it through 10 o'clock, through 10:15, 10:30, because there'll be a pullback. On a pullback, I would probably buy it, depending on how high the price is. But I don't think this will be over until it's over there. Waiting Doge SEC to identify. All right, so Richard, we'll come back to GBUX. But Richard, I want to point something out about the Anson Funds people. Oh, let me see if I can do it. I might not be able to do it, Richard. We'll see. It's going to tell me that I can't add. I need more space. Give me some space. And of course, it's coming up all out of order. I'm all out of focus. Wow, you've got a lot of files. Nightmare. Nightmare. I knew this would happen. So I will take Samantha Power down. We don't need her visage any longer. I'll take this guy down. I see what's happening here. I'm talking English. And you're listening in dumbass. I'll take that down. To give myself some more room. I'm going to take this one down. I'm not going to take this one down. I'm not going to take him down. He was such a good guy. All right. Let me see if I can get more. Anyway, Richard, here is the Anson Funds naked short fraud with MMTLP, the full story. That's not it. All right, so I have to go get that page, the starting page. Hang on. Because it didn't give it to me. All right, let's see if that'll come. One, two, three, four. Give one heart. Get back to. That's the miracle of I love you. All right. So many of you have probably seen how a federal judge approved document discovery subpoenas for Anson Funds and a host of other bad actors who were all involved in the destruction of MMTLP. He confuses this. I don't know if he means also metamaterials, because MMTLP is not technically metamaterials. But anyway, we learned about the update from a post on X. And for those of you who are interested, all of the court documents can be found here. I'll go through those later. There are lots of rumors going around about what Anson's management was with the MMTLP trade. Anson, of course, is denying any wrongdoing, of course. He's privileged beyond all privilege. We imagine Anson will argue that the fund accidentally tripped over some regulations. Oh, it's all accidental. We're the good guys. We're not the bad guys. Retail is the dumb traders. We're just, we're just trying to make a living. We got family to raise. Similar to its argument with respect to American Airlines. But it won't work this time. We have the full story for regulators to see below. Also, all the evidence they will need to prosecute is easily obtained. I've always said a pending graduate, a sophomore at the Mason School of Business could delineate this. The SEC consciously did not want to find anything here. Before we get into that, we note that on X, Drew Diligence has just posted a copy of a letter that has officially been sent to a senator by a state representative. This letter urges the senator to send a letter to Elon Musk requesting an investigation into the SEC's handling of MMTLP. I would not trust a single thing that Double D does. So this is probably just distraction. But who knows? Who knows? Maybe he's turned good. The letter highlights the lack of transparency and unexplained trading halt. The letter demands answers to questions which have remained elusive for some time. Our readers can help spread the word by sharing this story, speaking to state representatives, and bringing more attention to the issue to pressure regulators and force transparency. We appreciate all efforts by our readers to bring the story of criminal manipulation into the public realm. We need the story out there. And then he shows the case, which I can barely read. So I'm going to look at it on my... I'm surprised I can read as much as I can. Well, it's not here. It's not here. So I have to try to read this. The court being reviewed, received, redeemed. The court having received the ex parte motion for order requiring custodian of records for Anson Funds, it is hereby ordered. All right, that's enough of that. I can't read it. Here is what happened. Torchlight Energy was an oil and gas company. And what does Donald Trump want America to do, baby? Do? Well, you've got it. Torchlight Energy was an oil and gas company destroyed by these criminal men with the help and indifference of Adina Friedman, Robert Cook, Gary Gensler, Chucky Cromwell, and your brokerage firm, Ann Wagner, and any other congressman or senator that you can think of. Torchlight Energy, we don't need oil in this country. What we need to do is send printed money to Toronto and offshore, and through the gatekeeper of a functional idiot, Jeff Lind at Lind Partners, day trader of Yahoo is his qualifications. Torchlight Energy was an oil and gas company in the process of merging with a Canadian, well, it got destroyed prior to that, but anyway, in the process of merging with a Canadian company called Metamaterials in 2021. Something strange happened. The reported short interest went from 5 million to over 50 million shares, naked, I'm sure, short. And Anson Funds was a large part of this, north of 10 million shares. That's what they reported. I'm sure it was more. And even admitted to people that the fund was naked short Torchlight. How did Anson Funds get caught out? As part of the merger, the company issued a dividend called the Series A Preferred to all shareholders of record of Torchlight the day before the merger. In other words, if you were a Torchlight shareholder, you would receive the Series A Preferred, which later became NIXX. As a holder, this gave you the oil and gas rights, whether the company was going to sell them or spin them off at a later date. Now, Anson started to really grow its naked short position. The stock was very liquid, so Anson didn't think there would be any difficulty covering. I sound like Evelyn Wood. I used to read like this. Then I took the Evelyn Wood speed reading course, and all right, and this assumption was correct. Anson covered the short in the combined entity and the market, but it was post-dividend. Well, I don't know how they know they covered the short. But anyway, everybody, that's why we need transparency. The problem is that Anson didn't have any means to cover the dividend because it was naked short through the merger and naked short through the dividend. So, having covered the naked short position in the common, Anson was faced with a bigger problem: how to lie, cheat, and steal. The bigger problem was how to cover the dividend short, which was not intended to trade. But Anson Funds has friends in high places, low places, grubby places, dark corners, shadows, criminal organizations, banksters. Anson Funds has friends in high places, and the fund's partners in crime went to the over-the-counter markets run by Chuck E. Cheese Cromwell and asked to trade the preferred A shares. Somehow, because of these connections, Anson managed to get both OTC and FINRA to approve it, the trading, and the preferred started to trade. Anson managed to get the OTC, run by Chuck E. Cheese, and FINRA, run by Robert Cook and Jessica Hopper. And one of their board members is a high-level attorney at Goldman Sachs. All right, so now I think I have to go here. Yeah. So they got OTC and FINRA to approve it, and the preferred started to trade. I can't read that red, but maybe you can. He, go to his website, join his website. Who has this sort of influence? Well, criminals have influence with other criminals. We now have the answer. It explains why Anson Funds has not been shut down by the Department of Justice or the SEC yet. Citadel, TD Ameritrade, Chucky Schwab, TradeStation, NASDAQ, the paradigm of crappy markets under Adena Friedman, the DTCC, an organization of criminal banksters. And he says, he implies that the subpoenas will come for information to these places. Capital market corruption. Remember what Moez Kassam said years ago. Quote, no one goes to jail for this, unquote. And guess what? He's been correct so far. What is also interesting is that during this time period, the Options Clearing Commission came out with a memo stating if you were trading options and you were going to be short the Series A preferred, they were not going to make you settle that trade. They were going to allow you to not settle prior to the merger, and they were going to give you a 4-month delay to see if they could get MMTLP to trade, and funds, Anson Funds and others, could cover the naked short position. How the F is this legal? Ask Adena Friedman, ask Chucky Cromwell, ask Robert Cook, ask Gary Gensler, ask Ann Wagner, and the whole list of complicit crumbs. Then in October of 21, the stock began trading and people started investigating the oil and gas assets and started buying the stock. The stock went up to $12.50 a share, and then it was halted by a woman who now has a premier job at AG Edwards, Jessica Hopper. So if you're the Anson Funds, you now have a debit on your books of $122 million. I don't know where this comes from, but I think it's probably much more than that. But, that's the problem. There's no transparency. So if you're the Anson Funds, you're screwed because you have an obligation to your bookie for $120 million. Anson Funds admits it was naked 10 million shares. What happened 6 months later is interesting. Anson Funds contacted Roth Capital. Anson Funds contacted Roth Capital. Anson Funds contacted Roth Capital seeking to buy shares of NextBridge. 10 million shares at 30 cents a share in order to cover their short position. This is documented. That's not it. That's not it. All right, I have to add one more if I can find it. Sorry, it's when they save the photos, they don't, even though I choose them in order. Wow, you've got a lot. Well, let's go here. Let me just get the other one in case it matters. Okay. Oh, shoot. I might have lost you guys. All right, I'm going to go through this. So the problem Anson has or had was there is no way to buy shares in NIXX Hydrocarbons to cover their problem. Look, if this is out of order, just adjust your brain a little bit. I'm sorry. Unless they can talk someone into a private transaction. And that's why we imagine the company has its phone ringing off the hooks, trying to get a deal of some kind. It is possible they've done this, but it doesn't erase the fact that they were naked short, and this will soon be exposed. Here is a fund fact, which is fun to end on. This was not the first time Anson shorted Torchlight. The fund also did so ahead of an offering that the company did with Roth 4 months prior to the merger. There you go. There you go. Torch was looking to raise a minimum of $10 million in capital to consummate the deal. And Anson Funds misunderstood the word consummate as let's screw somebody and eliminate 17 million in debt, which it did not, which it did ahead of the Roth rise. The stock was trading very liquid and most likely being shorted, as well as new retail names coming into the stock. In other words, new retail buyers in February of 21. On the weekend of the Super Bowl, the company received a call from Roth Capital, so the rumor goes, saying there was demand to do an overnight for upwards of $50 million depending on structure. That's Anson Funds. Guys, when you buy into these, getting the price up, the shorts call Roth Capital to just deliver the company their own money. The company agreed, but said it would choose who had an opportunity to buy shares in the deal. Roth then told them that Anson Funds wanted the entire deal, which was $25 million plus the green shoe. Knowing Anson's MO and the fact that it likely shorted the company ahead of the proposed deal, Roth was told that Anson would receive zero allocation by the company. The deal closed the next morning and was priced at $1.20 after the stock closed at 150 the Friday before. So they shorted it, take no risk. These are these cowards. The stock momentarily traded lower to about $1.25 and then recovered as Anson received no stock and likely had to cover the stock it shorted on Friday. This is how Anson Funds operates. All right, so I guess if there's more to the story, I can't find it. Triley Evelyn would be reading course being dyslexic. Yeah, part of it's just my eyesight, of course. Hedge funds. You're a good man, Richard. And a good man knows his limitations. Might be wise to ban short selling during Victory Day. Look, guys, I think my opinion is he's got to bifurcate the two. Bifurcate. He's got to bifurcate the issue into large, let the big boys take care of themselves, and retail, the smaller situations where we get screwed. That's what I think. I have some NIXX. If GBUX opens selling, considering selling NIXX or buying more credit. Look, let's go over what happened with Nixie. They made an announcement on Friday. And I have a feeling just because of access, there might be some crossover in the investor groups. I don't know that for a fact. But Nixie, I guess, Friday announced they integrated their new telecom software. They're going to generate $250,000 in revenue for March. Well, March is already over. $2 million in April. That's coming up. And of course, they're going to have expansion, and it's going to revolutionize the industry. They'll have $250,000 in initial revenues in March, projected to generate $2 million in April, at least on a run rate basis. And this is real progress toward the company's goal of achieving $25 million in revenue a month. They did hit, this is their initial target, they hit it. And they feel they can scale the RLAIF AI. RLAIF AI blends, proprietary, that's important, I think, advanced communication capabilities using AI, large language model, to enable state-of-the-art intelligent billing, switching, and unified communications. This is something none of us knew was a need. The initiative directly aligns with Nixie's strategic goal of expanding AI solutions across industry verticals. And then they list all the great things that their AI does, and it goes on. And then Nixie continues to evaluate multiple strategic acquisitions or JV targets in order to enhance long-term shareholder value. I wish there were that kind of activity and logic, but I guess you go where your bread is buttered. A hedge fund's got to know. It's a hell of a thing, killing a fund. You take away everything they've stolen and everything they're going to steal. Why? Yeah, I think there are hundreds of millions of counterfeit shares in MMTLP. There's no question about that. What if the short is the one putting up the... It's not, Ben. It's not. In the case of... this is the trap that Wall Street's in, and you're in. You want to trade stocks. Wall Street wants you to put money with a money manager, whether it's an ETF, a mutual fund, a retirement planner, somebody that comes to your door with a printout with your name on the top of the page. They want you just to place the money. Then the companies consolidate. So you have huge pools, trillions of dollars with, I forget. One of the guys' names is Black, and he has Blue Rock, and one of the guys' names is Fink, and he has Blackstone, whatever the hell. They consolidate into $10-12 trillion. And then Goldman Sachs splits, goes get the bunch of the suckers to cover their risks, but they move the trading outside. They get the juice of all the trading, and they get a place to put their IPOs and other financings. Taxpayer covers the majority of the risk on the commercial side. They protect their risk on the so-called investment banking side by creating the F3 button, shorting the hell out of everything except for the 7 MAGA stocks. They don't short those. They take those from incubation to the home, and they charge all the way up. Wall Street reduces risk and steals every other step of the way, and they do it with glossy brochures and lying to you. There is no system protecting you. So you come in and you want to make money. The books say you can buy a stock. Well, as soon as the stock runs up, let's just see how GME closed on Friday. $22. So there was a flurry of investor interest and demand starting at around $22. Oh, the earnings are coming out. They're buying Bitcoin. Rob Cohen is the best guy ever. And Ratting Kitty is a genius. And, you know, the fundamentals here are better than any other bloody short squeeze stock out there. They have cash. They've got $5 billion in cash. You've got to own GME. So it runs up to 28. What does Wall Street do? They announce $1 billion financing. They help out the shorts. They pay off Rob Cohen. And who gets screwed? Who gets left holding the bag? Retail. At least with a $22 stock, brokerage firms can follow it. They can recommend it. The stocks we talk about, all underneath $5, $6, $7, It's like shooting fish in a barrel. So Anson Funds shorts, and I'm sure it's been Anson Funds, this genius of an investment banker, Jeffrey Lind. He has no clients. He just has a criminal that pays his bills. We'll show you how to do it. Go get a CEO to sign up, finger motion, and we'll fund it. It's not funding. They just short stock they don't own in the open market, give that to the company, and then you're left holding the bag. And it happens stock after stock after stock after stock. And how does Anson Funds reduce their risk? They have no risk. They give to Ann Wagner via lobbyists. They give to Professor Angel via lobbyists. They work closely with the prime brokers, probably 8 of them, Goldman Sachs, maybe Alpine. They have the best attorneys in the world, highest priced attorneys in the world. And attorneys can make the sky pink if you look at it a certain way. Well, Your Honor, it's not into evidence that the 23 hours and 55 minutes of the day, the only thing entered into evidence is the 5 minutes as the sun sets. Your Honor, we can't talk about anything other than that. Boom, boom, boom. I rule that the sky is pink. That's how the lawyers work. They can make anything fly. And particularly if you can threaten a judge that her daughter isn't going to get into Harvard if she doesn't go along. It's all corrupt, massively corrupt. Anyway, in the case of GBUX, one of the fantastic, I would argue, Ben, I own 325 shares. At least I have that. But this is not a stock that is going to change my life. But I think it probably is the single best announcement I've ever seen in a stock that has the potential. I don't know if it'll be a short squeeze, but it has the potential to go up dramatically next week. Why? I just read it to you, Ben. The 30% of the company, let me read it exactly. So I don't misquote it. My eyesight whatever happened while I was reading that is making my eyes double vision now in the normal. I guess my brain is learning how to adjust. All right, so GBUX announced yesterday, Saturday, March 29th at 4:17, GiveBucks details $212 million strategic investment, commits $212 million to an asset-based investment vehicle. GiveBucks, a publicly traded super app and charitable giving platform, today announced the intended sale of a 30% equity stake in the company for $212 million. Well, the other way to view that is the investor is valuing the company basically at $1 billion. No. 30 at about $750 million, roughly. The transaction is designed to be completed through a non-dilutive structure to protect shareholders. As part of the transaction, $212 million will be invested into income-producing assets. It's a multi-year commitment designed to produce consistent cash flows to provide funding to GiveBucks to support the overall expansion of the company and its super app. The majority shareholder has voluntarily agreed to retire a portion of its shares to minimize dilution to shareholders. Now, God, my eyesight, Ben, it's terrible. I guess I got to go in again. You can, I mean, if you want to be skeptical, you could say that it's a multi-year commitment. So maybe the money doesn't come in all at once. I believe it comes in all at once. But if you want to be skeptical, and that over time they'll sell stock in the open market. I mean, if you really want to be picky and negative, I don't think that's what this press release intends to imply. They're going to be putting $212 million into an income-oriented strategy managed by a real estate private credit asset manager. Sounds like the money's going right in. So the point is, Ben, this money is being raised by the company from an investor, obviously, but not from Anson Funds, not from Jeff Lind, not from Kurt and Seth, not from Ari, not from the corrupt Wall Street that we have to live with. So that's why I think you could see this stock really rocket over the next few days. On the other hand, maybe it just goes up, maybe it goes to 10, 5, 15. We'll find out, but it's going to be exciting, I think. Where do you buy GBUX? Well, I use E-Trade. I find E-Trade is it's Morgan Stanley. It's a pretty good app. They're responsive if you call into customer service. But there's a lot of places you can buy shares. You can buy it on TD Ameritrade, Chuck Schwab. You can open an account at Bank of America, Merrill Lynch, Morgan Stanley. There's a lot of, I would just get the yellow pages and you can find a brokerage firm. Would you still buy tomorrow? Yeah, I already answered that. I think if it's down in the morning, I would. I mean, I'm not going to. I don't have the money, but if I had money. If it rallies in the first 45 minutes, half an hour, I'm not sure I would buy into the rally because there'll be, the initial orders will be sated at some point, and then there'll be an air pocket. I would buy when it air pockets, if that's a word. Ham said he's having a victory. My eyesight is terrible. I'm getting a little alarmed. Ham said, I wonder if my lens needs to be replaced because I can sort of see the lens. Oh, Lord. Just make an appointment to go in. Ham said he's having a victory party in June. Does anyone know what this is about? April, May, June. I guess that's the annual report will be out. with finger motion, do we have to go through it again? The potential good news is we'll have more clarity on the C2 contract, the vehicles. To me, the best way out of this would be for Finger Motion to enter into a joint venture with SAIC, as a friend of mine pointed out, who knows engineering. Finger Motion doesn't have the capabilities of building up a it's not really manufacturing. It's more of a it's not even fabrication. It's, putting a truck together with a camera and a satellite and processing data. They don't know how to assemble all of that in the most efficient way. SAIC would. Finger Motion doesn't have the money to ramp up from 2 contracts to maybe 100 vehicles a month or a quarter. I don't know. The best thing to do would be to have SAIC bridge that gap. The second area that could be a surprise and could cause a victory would be a final success in what I understand is a $3 trillion insurance industry in China. Could be that. It could be the big data side. They score a big contract or whatever that's repeatable. But as soon as the company can have growing revenues, which are repeatable, which are projectable, which lead to cash flows and income, you've got a whole different story. And then the company doesn't need to go to Roth Capital or Jeff Lind or any of the other complicit crooks on Wall Street. Now, I have some sympathy for the brokers at Roth Capital. They make their money on commission. The bankers come in, they went to a school, and they're female, and they deserve to make the big bucks. Well, they don't have any skills. They haven't gone out on the hustings. They haven't spent 3 nights in a seedy motel waiting for an appointment that doesn't work out. They haven't done any of that. They just, hey, I deserve this. I got into school because of my how I was born, and I deserve to make money because of how I'm born. And rage, rage, rage against the patriarchy. So then these guys come in, and women, they do a deal. Well, in this setup, you've got guys like Anson Funds shorting the hell out of everything. And then there is no natural buying in the stock. They just give that money to the company, and the investment bankers sit in between. And hey, we're rich. They're just facilitating crime. And it's such a bad allocation of investor real resources. Every single company gets delisted on Adena Friedman's market, except the big ones. And where does the money go? Toronto, Frankfurt, Cayman Islands, the ever enlarging Hurry wife, I forget her name. Anyway, would I buy tomorrow? Yeah, I would buy GBUX if it pulls back in the first half hour. I would buy any time during the day that it pulls back. Up to a point. I mean, I don't think I would look, if it opens at 10 and goes to 20, you missed it. It's all right. Sometimes you're in the audience. Sometimes you're on the playing field. Both experiences can be enjoyable. They can be informative. They can teach lessons. Can we get the CEO of Railtown for an interview? Not now. Not now. Not while you should be buying it. If you want to wait to when I can get an interview, I think my lens. Is this an emergency? I think my lens is moving. Now, anyway, I'll call them tomorrow. If you wait until I get an interview with the CEO of Railtown, it's a $3 stock, in my opinion. What I've tried to explain about Railtown, to the point that you're probably as bored of it as I am. Railtown does this large learning model crap. We used to call it software. So they took They took 4 years of investors' money. It was tens of millions of dollars to develop their software. They finished that development last year and started marketing 3 products. The main one is called Conductor, spelled in a way that they can trademark it. So Conductor met with incredible interest because Conductor takes a process that normally involved a team or more than one team of human beings going into a company with legacy software, which needed to find a problem or recode its software or upgrade its software or replace its software. This used to take months, if not a year or more. 10s, 20, $30 million. Railtown's AI product, to put it simplistically and probably incorrectly, but you get the point, turned that multi-person, multi-month, multi-tens of millions of dollars into minutes, days, maybe weeks, but very brief amount of time. The artificial intelligence would can go in, locate the problem, upgrade the problem, replace the problem, and install the new software for a fraction of the time and cost, and better. So that meant when they were marketing it, that meant met with a lot of excitement. They went to the British Columbia conference and had great success. So what I suggested to you, E-Timid, is once they started marketing that product, the value creation model would happen like this. As they started marketing it and receiving contracts in a $120 billion marketplace as the first mover of a high margin, successful product, that their value would jump up the curve like a hockey stick. But what happened instead seems to be even better. I'd say we're here on this graph. We could be below here because I don't know the price they raised all this money. It could be slightly below, but I'll pick there. So what they did, they ran into a group called AI Partners. AI Partners is essentially a loosely organized venture capital gathering of AI companies, primarily North America, 161 AI companies. Collectively, they have, according to Twitter reports, they have 400 million in revenues today. In the announcement, it was made plain that Railtown would acquire AI Partners, but it really becomes a question of the minnow swallowing the whale, because in AI Partners, in the whale, are two guys who founded Constellation Software. They took that from pennies to my memory, $3,000 a share. So who's going to be running it? We'll find out. Further discussed in that press release is the strategy of rolling up, acquiring, blending into the whole these companies, starting with the best. Well, which ones are the best? I would guess it's the ones that add up to 400 million in revenue. So this was all announced now 5.5 weeks ago. The stock is dead in the water. When the announcement came out, they used MOU in the title. They used intended, I think they used that. And they implied settlement, potential settlement down the road. Well, when you have computers working for all of Wall Street's desks, not just Anson Funds, there is no place to hide. The computers look for an edge, an advantage. Their advantage is they're the first to read MOU. They're the first to read that the deal isn't locked in. They're the first to read that their company might need, or assume that the company might need capital. They start selling. Boom, 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 boom. Stock goes down from 36 to 26 over a period of weeks. You get impatient because you see other stocks going. You get impatient because you think there's integrity on Wall Street. You get impatient because you think the stock price actually means something. You get impatient because you think someone smarter than you or more informed than you has found out there's a problem with the company, with the deal. Well, this is what the criminals prey on. If the stock goes down, the deal will be called off, or more stock will be issued at a lower price, which bails out the criminals or the rest of Wall Street, or they'll start from that price and destroy the price even further. They win every which way. If they can kill the deal, the stock goes down because there's no growth. If they can drive the stock down by shorting it, they can book their profit by supplying that money in the offering. If they can drive the price down and get other people's help, the CEO might say, screw this, and you revert to the first scenario. Or the CEO might say, you know what, I really need this money. So they price the deal from that lower price, and then they discount it in a toxic fashion. Every scenario, the crooks win. It is like walking into a casino. The house always wins. The house are crooked. The house have hammers. They can bash in your hand when you have a hot streak. They have everything. Bring you a gin and tonic with a hot chick while you're having a streak. You make a hit, they comp you the presidential suite, and you come back the next day and you lose everything. The house, it is all crooked. So the computers started selling based on the news announcement, and you're like, oh my gosh, this is a shitty stock. I thought this was a good story. I thought their product was going to increase revenues and the valuation will go up, and instead the stock is going down. I want to talk to the CEO. Get the CEO on for an interview. It's not going to happen because instead of the marketing of their product, they entered into an M&A transaction, a merger and acquisitions transaction. You know, unfortunately, that's cost us 5.5 weeks. I know it's tough. Other stocks are going up. GME went up. Looks like GBUX might go up tomorrow. Finger went up. Stocks are going up. This has been down for 5.5 weeks. It's terrible. It's just terrible. How can you allow that? Let me talk to the CEO. $400 million just a month or so ago would imply a 19x valuation to that revenue projection. The most recent IPO of an AI was cut by at least a third. So let's just use 10x as a valuation, not 19. On the 400 million existing revenue, we'll use 10x. There's 150 million shares outstanding. Let's call that 200 million. I have no idea how many shares they're going to issue. 400 million, 200 million shares. At 10x, that's 4 billion. $4 billion divided by 200 million is I don't know. Let me just do the arithmetic with a calculator. $20 a share. $20 a share is one calculation. I already haircut this. I assume this doesn't grow. This might be too many shares or too few. It's a lot of assumptions. So there's no way this number is correct. But the magnitude from 30 cents to $20, let's cut this. Let's just take a third of that number. Almost $7 a share. Let's take half of that number while we're at it. $3.50 a share, and you can buy the stock right now for 30 cents. Let's get the CEO on. We need to talk to the CEO before we buy. All right, let me tell you the problem with that. The CEO and the investors at Railtown are in a quiet period. They can't talk. They'll go to prison. If anyone invested, let's say he did an interview with us and we invested on material information that was not made public, he'd go to prison. And your trades would be reversed and you'd be shut down or fined. Why is he in a quiet period? Because he announced a merger with AI partners 5.5 weeks ago. Well, it's terrible. I need to speak to him because these other stocks are going up. Okay. AIP is, I mean, depending on how you look at it, is getting purchased by Railtown, merged into. So the two guys that founded Constellation Software, the really wealthy guys, all of the 165 companies, they can't do anything. They can't buy the stock because they're merging. These two companies are merging. It's a quiet period. No buying. Obviously no selling. No buying. There's a quiet period. Canaccord GTI. Retail and institutional, family offices, mutual funds, all institutional, retail buying. No buying. No buying. Why? They're in a quiet period. Yeah, but I think we should talk to the CEO. Why? He's in a quiet period. So what does that mean? What does that mean to you? Well, you can look at the story and think, oh, that makes sense to me. Or you can say, you know what? I'm tired of it. I've waited 5.5 weeks. My stock's down. The CEO's not talking to me, and the other stocks are moving, and you can get out. My suggestion would be wait for the news. What could the news be? They finalized the deal. They finalized the already announced acquisition or merger, however you want to frame it. So you have a combined Railtown I mean, I've said it all before. You have news that they finalized the Railtown and AIP merger. Now, this will take time. This will take time, one by one, but obviously it'll come. They'll get to 400 million in revenue. It's AI, plus or minus, and there's 161 companies that are going to roll up into this combined entity. And who do you think will be running it? The two guys that did Constellation Software come to my mind, but maybe it's Brandolini, the CEO. What does news do? It's possible. I mean, we don't know for sure. It's possible when the news comes out, there's no longer a quiet period. Family offices, buy. Whales, buy. Retail, buys. Funds, buy. The investors in all the companies, buy. It's possible. But you know what? Once there's no quiet period, I'm glad to ask the guy to come on and interview with me. But what do you think? What do you think? By the time that happens, by the time he agrees that he can talk to me and the quiet period is over, where do you think the stock might be on the value creation graph? Maybe if we wait for the CEO to be available, the stock will be cheaper than 30 cents. Maybe it'll go down because he hasn't agreed to talk to anybody, and news doesn't go very quickly. News will wait for us to talk to the CEO. Or maybe if you're looking to talk to the CEO, the stock is I'm making these numbers up. I have no idea until we see the news. But my guess is the stock will be $3 on its way to 30. I'll be glad to get the CEO on if I can. I don't know if I'll be able to, or I can get one of the investors on for you. But by that time, your investment opportunity is going to be gone, in my judgment. But I'll be glad to try it. I'll be glad to try it. If you are a mime, does the quiet period ever end? I think it would be fair to ask if it ever began. Not disappointing, hoping it stays here after GBUX runs so I can buy more finger. Accumulation is a killer. Quote, credit to him. Yeah, finger looks good, by the way. The reason that I think GBUX has the ability to run is two things: surprise, and once the price gets moving, the prime brokers won't be giving the trap shorts any time. But here's Finger's chart, and I'm not taking credit, but I was saying in here, I can't read that, February. Yeah, I guess back in January even, I was saying this looks like a good time to buy calls. I didn't have the money. I didn't buy any. But I was calling that it would run up, pull back, run up. I didn't, necessarily wouldn't have called this far of a pullback. But once it breaks down, the support is here. But anyway, now what we've seen is it's going up. It's broken through the golden cross here. It's going through the 20 and 50-day moving averages, and it comes up to the 200-day moving average. That's resistance. Why? Because the criminals' computers are set up on these numbers. And then it pulls back to support, which was resistance. Look how it was resistance for all this time. Anyway, it pulls back to support. I would expect that it's going to, maybe not in a day, but it's going to get back here. I would count this as one attempt. You might get 2 more attempts on either side of this red line with pullbacks before it breaks through on its 4th attempt, or maybe you just get 2 attempts and it breaks through on its 3rd attempt. And then the screen just changed to Lowe's Hardware. But I think the stock looks like it can go to 220, and then 240 would be a target. And then, you know, up. It's got some work to do to break through that unless there's a surprise. And if there's a surprise, all that work can be done. The volume can be done in a day or 2. Is GBUX symbol RVYL? No, my pronunciation must be really bad. It's GBUX. That looks like an N, so I'll just do it like that. GBUX. Oh, that looks like a V. GBUX. GBUX. I don't know where that other symbol came from. Yeah, that'll be interesting. If GBUX moves tomorrow, what I'm probably going to do is I'm not going to bother breaking my 325 shares into parts. I'm probably going to just put it out there. Pick a number. Like I said before, I like the Fibonacci sequence. So that gives me a number at 144. I might put it out as a day to sell at 144. But I would reserve the right, if it starts trading, just to get out. And, you know, I'd be happy. I'd be happy with almost any win. But let's just fantasize that I got out at $100. What would I do with that money? That would be tough. That would be tough. Because I think Nixie has a chance of doubling or tripling. I think finger motion is going to go up almost double. I mean, it's up already. That's why but I think finger motion is going to go to $2.50, $3, and certainly could go to $4 in the next weeks. Could it go more? Yeah, sure. And I can't buy physical silver in my IRA unless I move it to, you know, I'd have to find a place to move it to. But maybe PSLV. But I think if it all happened tomorrow, I think I'd buy Railtown, RLAIF. Why? Because I think, as I just tried to explain, Railtown, there's a lot of uncertainty caused by impatience, which I understand. We've all been burned before, many, many times. There's no, hand doesn't follow Railtown, so there's no confident source of information that kind of is on a, scuttlebutt level coming from Wall Street, like Cam. There's no research. There's no affirmation. Is it really true? And frankly, AI looks like they had a bomb of an IPO. Although to me, I'll read that to you in a second. To me, that's a highly successful IPO. I mean, what are they complaining about? It just seems like they mispriced it. They were overly optimistic. Who are these bankers? Do they choose a price like the color of their fingernails? I mean, what is it? Sorry, I'm picking on the women investment bankers, but there's a lot of young male investment bankers that pick a number out of their hat, and a lot of it has to do with fees. A lot of it has to do with how much they drank the night before. It's no basis in reality. So this AI deal that didn't get done at the high end of the range, I'm not sure it's, I'll read the news to you. I'm not sure it's completed as I'm talking to you, but they've had to lower it, but it's still a gigantic number. That's why I took the 19x down to 10x in my example. So Railtown, to me, even more than Finger, it's a push on Nixie. It's a push on Nixie because Nixie looks like Nixie could have news in the next week or two. But Railtown looks like, I have to make this assumption. The Bureau out of Canada, who is responsible for approving mergers or acquisitions, pretty much does it. Everything gets approved. It takes 30 days. Well, we're past the 30-day period. There are occasional times when their mandate, which is to prevent, unlike in the United States, we don't care anymore. In Canada, they take seriously the limitation of competition. So if a merger is going to create a monopoly or almost, they're not going to approve it. And it can be delayed another 30 days while they, see if it can be fixed. So there's a small risk of that. But I think in AI, when you're dealing with 161 companies, just that in this one company, and there's probably a lot more than that, I don't see a concentration in AI companies. So I think I don't see that as a risk, but we have to acknowledge there's a risk that the 30 days could expand to 60. I don't think so. So my one assumption on Railtown is the 30 days was a week or two ago. So I expect something's going to happen. My other assumption is the end of the month is coming up, but more than that, it's the end of the quarter. That's a big deal for commission, for performance, for all sorts of milestones. So I think there's an incentive to get the Railtown deal done by the end of the quarter from the banking side. From the regulators, I don't know. How long do you have to wait? I don't know. But those are my assumptions. They're not going to delay it. And in fact, Railtown, it could be this coming week that the news comes out. Am I right? No, probably not. But those are my assumptions. Then my third assumption with Railtown is once they announce the news, it's all definitive. We have merged, we have acquired, have been acquired AIP partners. And as part of that acquisition our first roll-up, for lack of a better term, is XYZ large learning model company and QRP large learning model and 123 large learning model company. So with those three, we've achieved this level of this and that, and we had to issue 15 million shares or whatever it is. I'm making everything up. I don't know. But once that definitive stuff comes out, two things happen. We can then calculate a value or a range of values and make up our mind. Secondly, all those people who have been precluded from establishing positions in AI, and to me, what could be an amazing AI story, remembered on its own, and you can go to their website and see what Conductor addresses. It addresses $120 billion with a B, market revenues. They're the first to move. They're the best. They are claiming the beachhead. I don't know. That's just one. And then they have this network who are going to market this product, but there's also all of their products. Who knows? So I think that if you're a Canadian investor and an American investor, a North American investor, once the news comes out, you can buy. Will that make the stock price goes up? That's my opinion. Will the computers come to try to short it down? They've been trying over the last 5.5 weeks. They got it down by a third. That's pretty, I see that as bullish because the volume hasn't been that high and they haven't been able to destroy the company. But I can also see where being down a third while other stocks are moving can be discouraging. On the other hand, the overall stock market's down, what, 10% in 5 weeks? So I think Railtown is held in fairly well. So there's my assumptions. If GBUX went up tomorrow to a point that I couldn't resist selling, I might be tempted to buy Railtown first, because I think once the news is released, I think Railtown could be a $3 stock. Where do I get that? I don't know. I think the stock could be $30. So I'm just eventually, so I'm taking 10% of that. Am I wrong? Sure. I'm going to be wrong. I'm making a prediction. But I don't know. Take half of that. It could go to $1.50. Then I could sell that and buy Finger Motion or buy, I would say of all the stocks that we've talked about, if Railtown were to go and I got out of that, Finger has the best story. GDC and ZJYL, I don't think have faded away, but I don't think I'd put a lot in there because I don't know when. And, I'd rather be in something that looks stronger fundamentally. Sam coming on today? No, I don't guess so. It's Sunday. And I want to watch Djokovic, so let me see when he plays. 3 p.m. So I'm not going to be on. I am not going to be on past 2:45 if I make it that far. Buying more Finger. Finger primed to take off. Anyone scared Finger went down? I'm not scared with Finger going down. I just showed you the charts. And I should have taken a picture of that chart. It's normal when you break resistance that you come down the resistance you break through becomes the support, and it always gets tested. So I don't think it's scary. I don't think there's much more that can scare in Finger unless they just completely fail to execute. The stock price collapsed from that 240, 260 range because they went to Roth Capital. Univest did nothing for 2 years. Is Univest part of the short selling scheme? I have no idea. But it worked out to help the shorts because Univest didn't raise any money. So then you're coming up to the end of the year. You know the Chinese New Year's coming. You have a big contract mandate, and it's an exclusive contract. You have to fund it. You swap out of Univest. It takes 30 days, so the whole world knows in the criminal world. And in comes Roth Capital, who is just a pass-through for Anson Funds. And Anson Funds crosses the stock. I guess that's not going to upload. So anyway, that's what destroyed the stock price, was a shitty investment banking. Look at this. In Finger Motion, there are 34 institutional holders. Institutions own almost 2 million shares of the stock. Anson Funds own 725,000 shares. I don't know when they bought all that, but I'm told they were one of 4 investors, and they got 85% of the deal in Finger Motion. I don't think that's going to happen again. So I don't think there's going to be a reason to be scared. I don't think there's going to be a reason to be scared again in Finger. But, you know, these are speculative stocks, and I guess we could create a negative scenario. I think what you have coming up in Finger Motion is April 15th, you have earnings, fourth quarter earnings. And if those show a path to profitability for 2026, which we're in right now for Finger, that's going to change the story and the price. If the vehicle contracts show growth, that's going to change the valuation story. If the insurance or the big data shows something that we can understand and sink our teeth in, that'll change the price. If they have a joint venture, the logical one to me is SAIC of some kind, whether it's cash or forbearance or vehicles in exchange for shares. I don't know, or just Finger Motion can use their balance sheet. These are all things that can change the perceived value of Finger dramatically. And once that is established, and particularly if that can be established on the big girl, big boy level, the shorts are going to have a hard time shorting it down. But you can see the risks in Finger. They have to execute. They can't lose that contract. They cannot do another deal that's just simply a pass-through to Anson Funds. I was thinking about that. I read to you the stuff about Anson Funds yesterday. And the well, I'll read this. I don't know if I think we did it, but I'll read it. It doesn't take long. This is the Anson Funds. I can't remember, Julius, if I read this yesterday, but the Anson Funds on the same toad. And that website is marketfrauds.toronto, marketfrauds.to, marketfrauds.to. It says Anson Funds update, wire fraud charges and money leaving the fund. I can't remember if I read this to you, so I apologize if I did. It's short. Anson Funds. And so, Julius, why this relates here with Finger, I was just wondering if Anson Funds is in such trouble and the DOJ out of California is in fact a threat to Moez Qassam. Why did they buy 85% of the Finger if that intelligence is correct? Why did they buy 85%? How did they buy 85% of the Finger Motion deal? Or does it imply that Anson Funds is working with the Department of Justice, and in return, the DOJ is allowing them to work out of some of their issues? I don't know. Anyway, Anson Funds and Moez Qassam have had a terrible March. The pressure from the DOJ is increasing, and Moez and Anson are rolling on everyone, rolling in the sense talking. This is from a source within Anson Funds. What we know, this is marketfrauds.to, marketfrauds.to. What we know is that the Anson Funds case is being handled by the California division of the DOJ, who specialize in racketeering charges. We also know that Moez is heading along to see the DOJ on Monday, 31 March. That's tomorrow. We imagine to tattletale on others. The same source tells us that Moez has been caught dead to rights on multiple charges of wire fraud and a myriad of other charges. It is apparently so egregious and on such a scale that Anson will be unable to fight the charges. Well, lawyers can fight anything, particularly if they're well paid. Anson will be unable to fight the charges as authorities have text messages, Slack conversations, WhatsApp messages, Bloomberg chats, and more. Moez was incredibly sloppy, or was he? And arrogant, or was he, in his dealings, and left a mountain of evidence for authorities, as we have seen in the Can Trust messages, which we covered in a previous piece. I think I read those to you. Jail, jail. Moez will be going to jail. I would love to see prison. As things currently stand, Moez is looking at 20 years behind bars and he is making a desperate final push to roll over on other people. So roll over means tattletale. It means rat. It means sell out others. So he's making a desperate push to roll over on people in order to reduce his sentence to 18 months. Of course. Why would we ever treat these gentlemen as criminals like the poor man under Bill Clinton or Joe Biden, who had a felonious amount of marijuana in his possession for the third time and gets locked up for 30 years? Why? Why would these guys have to suffer that? These guys are white after all. So Moez is currently making a desperate final push to rat on others to get his sentence reduced to 18 months. We hear that this is unlikely. It'll probably be 5 to 7 years. I will see. In order to accomplish this, he has to rat on some big fish. And who is bigger than the banks and the brokerages? Nobody. With that in mind, Moez is currently, and where can the lawyers get paid off, by the way? Big money. Moez is currently putting together files and is planning to hand the banks to the Department of Justice on a platter. That's, I guess, from his sources. And we'll find out tomorrow, I guess, or could find out something tomorrow. These negotiations have been in process for over 12 months, and they have really not been working in Moez's favor, which is why Moez is desperate to hand the feds somebody big. We imagine that TD Bank attops the list, with yet another scandal soon coming that way. I guess another one to TD Bank. But it's not just the banks. Moez is rolling on everyone. Anyone who has had shady dealings or any sort of tie-in to any of Moez's DOJ targeted activities should be in full preparation mode. It is time to run for cover. Moez is also doing a whirlwind donation tour, gifting tens of millions he grifted to various charities. I added to grifted. So he's gifting what he grifted. He's grifting to gift. Gifting, it says here, gifting tens of millions to various charities, which are tax write-offs, in an effort to boost his image and show that he is a lovely person and not a grubby white-collar criminal, and he certainly doesn't meet the Clinton-Biden crime bill 3 strikes you're out requirement because he's a honky who lives in Toronto Tonki. and not a grubby white-collar criminal who has destroyed tens of billions of dollars of value. Why would that be worse than selling marijuana? It's not. This is okay. I mean, come on. It's okay. TD probably donated to Hillary's campaign. And you know all about toxic masculinity. That's the thing we have to go after. We can't go after this. This guy's a good guy. He's not a grubby white-collar criminal who has destroyed tens of billions of dollars of value in the markets. And that underestimates it, by the way, and stripped away the savings of hundreds of thousands of retail investors. None of those retail investors are women or minorities, by the way. It gets really complicated when you try to live life on a woke agenda. If you're helping these guys, these criminals, you're hurting investors who are normal. They're women, they're gays, they're Muslim, they're Jewish, they're atheists, they're white, they're brown, they're elderly, they're young. And the majority of United States financial assets are held by women. Whether the snitching and the charitable donations will make a difference will become clear soon enough. We are doubtful. As our inside source believes, Moez will be seeing the inside of a jail cell soon. The next 6 to 9 months are crucial for Moez. What happens during this period will dictate how much time he gets. The other problem for Moez is he's Canadian. I mean, that is a problem, as we all know. It's tough to be Canadian. I'm kidding. The other problem for Moez is that as a Canadian citizen, he will not be going to a club-fed facility. There are restrictions for non-US people, and he will most likely end up in a medium security facility. Not with those drug dealers that Joe Biden captured and Bill Clinton. 3 strikes, you're out. I pity the fool. So a medium security facility is not a place for a tubby little hedge fund manager. Not at all. This means that Anson Funds is finished. And Julius, this gets to my point. If Anson Funds is finished, how did they fund Finger Motion? Word is spreading on the street about these developments, and legitimate assets are leaving Anson Funds like rats abandoning a burning ship. At the end of Q1 24, the fund had, listen to how puny the amount of money you need to have to destroy trillions of dollars, to steal hundreds of billions of dollars of market cap. At the end of Q1 24, Anson Funds had $1,544,514. At the end of Q4 2024, the main fund had there's got to be a typo here. I'm going to read it the way I think it's supposed to be. At the end of Q1 2025, well, but we're not there. Anyway, he's saying at the end of 24, the fund had 991 million. which is a lot more than 1.5 million. Maybe the fund had 1.5 billion and now is down to 991 million. Anyway, there's a typo there. So let's move on. We have been told that there have been some big withdrawals over the past few months, with a number of accounts pulling their money, and the fund is losing a large mandate. And we expect this number to fall further, the assets under management. In fact, soon, the only money left in the fund will be that of Kassam himself. So I think that's what he meant to say. At the beginning of the year, it was 1.5 billion. At the end of the year, it's under $1 billion. Which is still, who are those investors? They're all complicit in crime. In fact, soon the only money left in the fund will be that of Kassam himself. The other partners and dirty money is now trapped. It cannot run for the exit because there is so much scrutiny on the fund and on every move the fund makes. Legitimate investors legitimate investors cannot be associated with Anson Funds any longer, following the charges and following the growing number of scandals. With money now bleeding from his fund, Moez will have trouble paying his monstrous legal bills, which we hear are well north of 5 million a quarter. That buys a lot of lawyering. Note to the Anson Funds, note to the Anson Funds lawyers, make sure you get paid up front. Yeah. Moez's greatest fear is paying all of the money back. Legal expenses will have to be paid back to the limited partners. As we mentioned above, Moez is getting the fund to... Moez is having his fund spend a fortune on legal fees on both the criminal regulatory side of things and also with respect to multiple civil lawsuits. He needs the investigations and charges to go away, and he needs the noise generated from the civil lawsuits to be turned down. Why? Because if the fund is criminally charged as the key person controlling the fund and directing the staff, not only will he be going to jail, but he could also be forced to pay back all gains made, not only to authorities and fines, but also to the unit holders and to the limited partners who could sue him. For the misuse of their funds to pay his legal fees spent trying to defend his criminal behavior. The level of expenses he has been running up on the funds tab is phenomenal. These funds aren't coming out of management fees. Of course not. And the unit holders who are paying the bill will seek retribution and recompense. If the unit holders are smart, they will sue Kassam personally in order to recoup the funds for themselves. The limited partners have little choice if they are run correctly. Oh, I see. If the people running the limited partners are following fiduciary requirements, I see. If you are an institutional investor, you are not going to bear the cost of these lawsuits, which defended criminal activity, because this would constitute a failure to fulfill the institutional investor's fiduciary duty to the institution. They would be duty bound to recover or try to recover these fees from the fund or from MOES. This applies to both the regulatory and civil lawsuits, and it is why Kassam is fighting so hard, such that he is throwing everything that the fund has into fighting these legal battles. We imagine that MOES's greatest fear is this: when the criminal charges are brought down, like the whip comes down, not brought down in magnitude, when the criminal charges are when the criminal charges are prosecuted, the fund will be shuttered, huge fines will be paid, and all illegally obtained gains will probably be clawed back, as was the case with Bernie Madoff. Old unit holders just fade away. Old unit holders that had money in Anson Funds and who made gains from these improper actions could be contacted by authorities. They may have to pay their gains back. These unit holders may fight it, but that's unlikely. Who wants to get into a fight with the DOJ? Why not? They don't do anything. And be named a co-conspirator in a criminal fraud case? No one. They will give the money back. The same will be true with the charities, to which MOES has been so vocal about giving money to. He will have breached the agreements he has in place with them, and his name will be removed from the hospitals and schools to which he and Marisa have donated. These institutions cannot be associated with money gained from Kurt Kramer. Oh, it doesn't say that. With money gained from illicit actions. The issue is whether the charities will have to give back the money, and they typically do. These clients would then have every right to sue MOES directly or to sue Anson Funds for the fraudulent activities and the fees and losses which they have incurred. Every dollar that MOES paid himself from the fund can be traced and pulled back, even if he put it in his wife's name, my Melissa, or he bought a house or a restaurant. Regardless, the regulators and the limited partners can pull all the money back. They can even go after assets abroad. So his little pile of money, which he's been building in Dubai, could also be seized. This is potentially the most dangerous thing for Moez. It would cripple him financially, and all of his illegal activities will have been for naught. I think this guy at marketfrauds.to sounds like he still believes in the system. I hope he's right, though. This is terrible for Anson Funds employees. Any employee involved in any of the transactions deemed to have been improper by the funds, deemed by the authorities or the court, but the actions would have been committed by the funds, will be forced to talk and will be subject to criminal prosecution depending on how much they knew. Sonny Puri is going down for starters. Brother, if it comes between me, it comes between you and Sonny Puri, brother, Sonny Puri is going down for starters. Amin Natu, Tony Moore, Tahir Datu, and Laura Salvatore are all going down as well. They cannot hide from what is coming, and there must be sheer panic amongst them about what the future will bring. Is Andrew Left turning against Anson Funds? This wouldn't be a surprise to us, as he has probably learned by now that Moez gave him up. Left had held strong until the end, telling numerous people that Moez would never betray him. He was wrong and is likely realizing this. This may be one of the reasons why Left put out a tweet on Guerrilla Technologies claiming they are issuing false statements, or maybe he's got a short deal going on. It just so happens that Anson Funds is the largest institutional holder of Guerrilla Technologies, owning 600,000 shares of the company. That's it for now. Just a short update. But we will have a longer piece coming out in 2 weeks' time. Barbara's so nice. I wish I could go to school to be nice. You could be buried for hundreds of millions of years and become nice. All right, let me see what Short Sucks says. Martin Shen said he would avoid toxic lending. Are your thoughts on the integrity of Roth and Anson? Look, I think the majority of people at Roth are honest. To say a majority is probably insulting. I would say 97% of the people at Roth Capital are honest. It would just be the tippy top, if they have a prime brokerage side, it would be their stock loan department. It would be the compliance so-called officers who look the other way. And it might involve one investment banker or one or two of the institutional salesmen or the regional national institutional sales director, because they have to know that Anson Funds is just shorting the stock in the open market. The other area of Roth that might be deficient is in the, when you put up money, it has to be settled money, and your money has to be there prior to settlement of the trade. Although I guess we're at T+1, we'll go to T0 soon, so settlement will be the same day. But they're not required to do that. And your broker-dealer is obligated to ask the other side for delivery, and somebody doesn't do that job. So the example I have given before, which I violated in my lifetime, if you get invited to a party, it would have been at Merrill Lynch, not in college, but if I got invited to a party and there's a bunch of cool guys and hot women and my hot girlfriend there, not and somebody pulls out cocaine, well, that's against the law. And under Bill Clinton and Joe Biden, you should report that, and those people should go to jail if it's their third offense. But me, I see it. I'm having a beer, checking out the high skirt and my sales manager's in his beautiful suit, and I look the other way. Have I broken the law? Well, I guess in a university situation, I would have broken the honor code. But I don't know. Is that breaking the law? Does that make me complicit? Does that make me part of it? I don't know. It gets too complicated for me. But that's what I think happens in the brokerage firms. People look the other way. They look the other way. They don't report it. They want to keep their job. They want to keep their car, keep their wife, keep their husband, keep their children's dreams alive. And so I think that happens at Roth Capital. A lot of people look the other way. There's one of the problems on Wall Street is you don't make money getting a client to buy or sell a stock. I think that's one thing they should bring back. I think they should bring that back. So you just live off of the money that Anson Funds gives you for commission. And then you live off the money. If you look the other way, Anson Funds shorts $25 million worth of stock, and you put together the investment banking, and your institutional broker supposedly sells the deal. All he has to do is pick up the phone, and Anson Funds says, we'll do it. And it goes through the lawyers, pre-approved. The documents are pre-approved by Anson Funds. The lawyers for the fund that Anson is going through, Anson paid, and then compliance just sets up the document, or the banker, and it's done, crosses, they get a big fee. It's not real work, and it's all criminal. It's all criminal. So I don't know how to answer you. Is it just people looking the other way? Did I benefit at that party by being there with the hot chicks and my hot girlfriend and management? So therefore, I got a value out of being at a place where a crime was being committed. I don't know. I don't know. I don't know. But I think in large part, everyone at Roth Capital is honest. Anson, I don't think anybody's honest there. Could Roth and Anson create the same fiasco for Finger? Yeah, I think that's a real risk. But I think the difference is, and I think it's a big difference, by the way. I think it's significant. Even though I'm skeptical of the effect this has on the stock price, the fact is Finger hired Wes Christian and bought back the entire toxic note. Secondly, Finger Motion has never done another toxic deal knowingly. I don't think they realize, and I didn't, to talk out of both sides of my mouth a little bit, I haven't seen the documents that they signed. I don't know why it's hard for CEOs not to recognize the tricks in documents that is going to allow for the destruction of their stock price. On the other hand, the CEO is good at what he does. Wall Street's supposed to be defended. NASDAQ companies are supposed to be defended by Adina Friedman. She doesn't do anything. She's worthless. And then Gary Gensler is supposed to keep a level playing field. There's no level playing field. It just goes on and on. I'm not going to go through it all. It's just depressing. There is no level playing field. But the other thing Finger Motion has going for it is there are very real potential, not necessarily out of the blue, but once 1, 2, or 3 revenue sources solidify, it can just change the story overnight. And that could be coming soon. I mean, there's no guarantee, but that could be coming very soon. I also think the shareholders are working extremely hard. Ham is working beyond capacity to make sure that the shorts do not prevail here. But there is no capital. Short sucks. There is no capital. NASDAQ should be shut down. The over-the-counter markets should be shut down if they're not going to have honest policemen, honest regulators. There is no integrity at the SEC. FINRA is a private corporation. The DTCC is run by the banksters and even some of the big hedge funds. Guys, this literally is letting Al Capone run the bars in Chicago. You know? And the money flows just like that. The looking the other way flows just like that. So, no, but let me answer your question. There is a risk point, short sucks. If the company does another deal with Roth Capital without demanding that Anson Funds not be included, it might mean more work, but Martin Shen is not adverse to working hard. Personally, I would tell Roth Capital, It's not me. It's not you, it's me. We weren't happy with the last deal. We want to break up our relationship. And if I were Martin Shen, I'd come on this little podcast. I'd have him pound the tables. I'd get maybe Busy Brands to help me. And, Martin should pay Busy Brands a consulting fee to help. And he should raise $10 million from us on a plain vanilla offering, and maybe warrants. We get warrants with the offering, but our warrants would be broken up amongst 500 investors. We wouldn't know how to short against it. We don't have the ability to short. So that's what I would do if I were Martin, but he may not have time. He may not have time. If he does another deal with Roth Capital, it'll be treacherous waters. I'm not saying it can't be done. I'm not saying it can't be done carefully, productively, and frankly, short sucks. I can envision, although I don't have the data, I can envision where if finger motion is able to fund this quarter, next quarter, maybe the following quarter's C2 contract, they may never need to go to the market again. So it might just be a one-off, one more time. We'll find out as we go. But I think Martin has no intention of helping the shorts. I just think he got, as ever, the company, if they hadn't taken the deal with Roth Capital, the stock would be 25 cents today. This is the magic of the criminality that happens with Adena Friedman's either support, acquiescence, or indifference. If I were a CEO, I don't know why you would want to go on the NASDAQ, except it sounds good from the past. Adena Friedman's doing nothing to protect shareholders or CEOs' companies. Adena Friedman does nothing. Just stay, even in the over-the-counter market, you're better off. But just stay private. Just stay private. There's no advantage to being public under $10 a share in the US markets. There's no advantage. Just stay private. Unless you don't need money, unless you have cash flow, unless you never go to Jeff Lind or Anson Funds, they have the US markets by the throat. And they is probably 50 or fewer men. I'm thinking of buying Railtown. How much would you own? Well, I don't have, I used to have a reasonable account. I don't anymore. So my numbers, Augustine, it depends on what your goals are. If you're like most people here, this is my assumption, most people here have a small trading account. Now, they may have a large asset in their home. They might have a large retirement asset. They might have a big account with a a fund group or one of the bulge bracket firms. But I think what a lot of people here are trying to do, whether it was with AMC or GME, is to turn a small amount of money into a bigger pie and then diversify. So if I were just looking at it as my account, which is small, it's my IRA primarily. I think I would put 85% of my money in Railtown right now. Maybe 5 or 10% in GBUX and 5 or 10% in NIXX. I would be quick on the trigger with Nixie as soon as there's volume in Nixie, whether I make money or am losing a little bit or make a profit. As soon as there's a lot of volume, I'm talking 50, 70, 80, 100 million shares, I think I would just get out of Nixie. The story has a good fundamental ring to it, but I'd let this initial flurry go on without me. GBucks, if GBucks runs, I'm more inclined to pull the trigger and get out than hang on for the long-term story. Doesn't mean I wouldn't come back into it for a longer term story. I think GBucks could be a squeeze tomorrow or Tuesday or Wednesday, believe it or not. But what are the odds that somehow we lucked into a squeeze? Pretty low. So if GBucks goes to 10, 15, 20, I might sell some. But like I already admitted, I'm probably going to go for the home run because I only have 325 shares. It's not going to change anything anyway, one way or the other. But the reason I'd be in Railtown right now with a large percentage amount, is all the reasons I just gave. I think Railtown, you can read the press releases. You can go to their website. It is an R&D company that now has a product ready not only to perform, but to change the value of the company the perceived value of the company overnight. In addition to that, the company is in the middle of a merger, an M&A transaction, which I think transforms the company immediately. And you've got people in there that have done it before. You've got bankers who have done it before. And then you're bringing on investors who turned a penny stock into, I think, $3,900 a share. Anyway, you can look it up, Constellation Software. It took them 10 years, 15 years. But my gamble would be that Railtown has news this coming week. I have no knowledge of that. I'm just putting all the pieces together. I think GBucks owes us another piece of information as implied from the news they put out yesterday, the 8K, so maybe there'll be more news there. And then I think Nixie has more news coming. So it's which one goes first? It's a judgment call. Do they all go or do they just flounder? That's a judgment call. But I would go with Railtown for a majority. I expect that once the news comes out on Railtown, whether it's this week or next or in a month or two, buying will come in to Railtown in size. Will there be a lot of selling? We'll find out. But my guess is the counterfeit selling will cease, so the buying will make the stock go up. At that time, I would sell Railtown. And, my priority, I'd love to get into silver. But Finger looks good. I think Finger looks good. So if I play that correctly, I could come rebuild my position in Finger. And then if Nixie's still down low, maybe I buy some of that. Maybe I buy some ZJYL, some GDC. But there might be other stories like this Who. Who do you think you're fooling? There might be some other trades. But if I have real success in Railtown, I'm probably only going to do tiny trades in the rest because I would like to buy those others. I would consider reestablishing my large position in Finger Motion. And I'd love to get a meaningful position in silver. It's going to be hard to do in my IRA, so I'll probably do it with PSLV. But anyway, that's all to be revealed. But just for trading purposes, over the next week or so, I think Railtown is the place to be. Tomorrow, GBUX might give you a chance to get in. Maybe tomorrow, Tuesday, Wednesday, GBUX is finally something that is powerful. Nixie, I think it could double in the next week or two. But it's already tried a couple times, so it's a flip of the coin with me. Finger Motion, I've explained. I think it's buy the dip, sell the rip for the next few weeks. Once the earnings come out, once the annual report comes out, if there's news out of the blue and the stock is profitable, you could establish a higher price level for Finger, whether it's 4 or 5, might be 6, 7. It's a big number, but if it stays up there, the shorts have a cost to carry problem, and the prime brokers aren't going to let them get away with it. So I'm intrigued by Finger Motion at these prices. I wish I had been able to buy it at $1.04. That's the memory of where it was when I turned positive on it, really positive on it. But right now, I'd put 80%, 85% of your trading money in Railtown. Investor money, it gets a little more complicated, but I think let's just do the next fortnight. And these are just guesses. This is going to make you mad, but I just got to stick with myself on this. I can't help it if I'm still in love with you. So, Augustine, let me take your message down. In the next 2 weeks, I think Railtown has a chance to give you 10x within the next 2 weeks, 10x on your money. And I give that a high degree of confidence. In other words, I don't think there's a lot of downside. If I'm wrong, it takes longer. If I'm wrong, I still think you could get 3 or 4x. So in the next 2 weeks, I think, and this is a prediction, not a promise, in the next 2 weeks, I think Railtown gives you 10x. 30 cents goes to $3. Could it be more? Sure. GBUX in the next 2 weeks, in the next 2 or 3 days, could give you 25x. I think that's optimistic. I think that's a high call. It's high risk because if you're not in it, you're overpaying. But I think GBUX could give 25x. I think Finger could go up 2x in the next 2 weeks. Notice I said 2 weeks. I'm not saying that Finger couldn't do much, much better after the earnings come out. But in the next 2 weeks, I think Finger can give you 2x. And I think Silver can give you 3x in the next 2 weeks. And that scares me. I want to own Silver before it does that. But Silver could also be flat, or it could just go to $40, $50. But if you asked me, which you did, what you would do in the short run in your trading account, I think Rail is the best risk reward to give you 10x. GBUX could be the one that we finally go, wow, did you see that? But it's risky. I don't think Finger has a whole lot of risk, by the way, from here. I don't think there's a lot of risk. So on a risk reward basis, Finger looks highly pounceable. But in 2 weeks, I think the most you can see, if it happens, is 2x. And Silver, I think, like Finger, I think has no risk. And if it were volatile to the downside, the sale price would be highly jump-onable, highly pounceable. So that's how I see it. The most likely is Railtown. GBUX, all the setup is there for tomorrow morning, Tuesday. We'll find out. I think it'll be risky. Finger has a lot of good things in place, but I think it's going to be fighting and clawing until it can achieve $3, $4. But that's a big move from here, so I like it. And Silver, I think, goes to $90 or $100 in the next massive move. But the problem with Silver, if you're not in it, there could be a physical failure to deliver. I think in London is where it'll show up, and it could take down JP Morgan. I think the bank I think Silver will take down Merrill Lynch first, Bank of America Merrill Lynch first. That's a totally speculative call based on something I heard on a prediction 2 months ago. I used to think it would be JP Morgan, but my understanding is Jamie Dimon is the largest long position in Silver as well. So I don't know how that'll all play out. But if I had to pick a bank that's going down because of it, it'll be Bank of America Merrill Lynch. But it could be a different bank. There's several bullion banks. They could take a bank we've barely ever heard of, like they did with Barings, take it out and shoot it. But I think with Silver, it's going to be a failure of delivery of physical silver on the London Metals Exchange that could set off the biggest short squeeze you've ever seen and the biggest financial Armageddon that's ever occurred certainly in our lifetimes, but in our memories or even what we read in the history books. it could be really bad, which is probably why we'll go to war first. It's probably why the Fed will spring into action. It's probably why the too big to fail mantra will come out again. And it leads me to believe, if you're asking me over the next 2 weeks, I think Railtown is the one with the highest reward and more stable risk factor. Railtown. I think I don't know what you're risking in Railtown if it's speculative money. I don't know what you're risking in Railtown as compared to other speculative plays, other than missing out or time. I think you got to be cognizant of the fact, and maybe I can read that to you if I can find it. I'm really worried about my eyesight. Uh-oh. Trump's mad at Putin. I was so hopeful. So hopeful. When I meet you on the street. I can't help it if I'm still in love with you. I can't find it. Of course I can't. Of course I can't find it when I want it. It's like McDonald's when you're driving in the morning and you want their egg sandwich and you've passed 6 or 7 McDonald's on 95. And then when you want to pull off to get it, you can't find McDonald's. Or a Wendy's single cheeseburger. When you want it, you can't find Wendy's. And when I want it, I can't find this article. Let me see if I can. Here it is. The big headline, and I can't get the whole story here. The big headline this morning is the news that Coreweave, a player in the same space as NVIDIA, was forced to downsize its plans for an IPO. Coreweave is set to scale back its IPO. So the valuation is going to be $23 billion instead of $30 billion, and they're only going to raise $3 billion instead of a higher amount. So the question is, as it relates to Railtown, is the bloom off the rose for AI? I don't think so. I mean, what's the difference? 30 billion, 23 billion? That's still a lot of billion. You're only raising 3 billion instead of what, 5 billion? Still a lot of billion. So it's a lot of squid in the ocean. Considering trading gold for silver, let me show you something. The winged wolf. The winged wolf. Let me show you something. Tell me something good. Tell me that you. Oh, that's not it. Tell me that you love me. Tell me something good. All right, gold silver ratio. This is if you're putting new money to work. This is the Maloney ratio of putting new money to work. If the gold silver ratio is under 50, 100% of your money should go in gold. If the gold silver ratio is over 80, 100% of your money should go into silver. And I'm scared to look at the silver price because I'm going to miss out on building a position in silver. But I'll look just for you, because really, Bill, I do care. So gold is 3,100, and all the banks now are making their brave calls. Excuse me, but if you've been here, you've known that I've been saying I think gold is not only going to 3,500, I think it can go to 4,000 and higher right now. So gold is at 3,100, and silver, I don't want to know. Yep, silver's at 34. I guess I'm not going to be able to buy it until it's 60. All right, so silver is 34 and gold is 3,100. It's 91. It's 91. So I think if you don't have new money, I think it makes sense to move your gold to silver. I think the ratio is going to go much lower than 50 to 1. But for now, Mike Maloney, oh, you can't see it. Let me see if I can put it here. Mike Maloney's recommendation makes the most sense to me. I would do it. I would move your gold to silver. You have to stop thinking. If you see, I lost. So everybody who had questions before this one, I've lost them all. I'm sorry. I don't know why I lose them all. So if I don't answer, it's not because I'm trying to be mean to you. I lose them. 5,000 finger and rail. I like that trade-off. I think the two stocks that I see as the most stable on the downside are finger and rail. Doesn't mean finger couldn't go down, $1.50 or so. But I think finger is limited downside right now. What would the risks be? Well, if they do if their only choice is to do a Roth capital financing, I think we all have to face the facts that Roth isn't going to do a good price. Roth is going to do a price that helps the shorts, and the stock will be shorted down. But I think Finger got burned by Roth, even though everybody's such a gentleman, they won't say it. So I don't think that path is that likely. I think it's much more likely that Finger Motion will raise money from investors or from a prearranged. Roth might be the team putting it together. They might get the investment banking payout. But I think there's money out there, or corporate alliances that Finger can turn to that will protect us from the stock going back below $1.50, $1.60. So I think Finger is a real risk reward entry point now. And Railtown, I think, is just beyond. I mean, if I had $5,000 and I could buy, 15,000, 20,000 Railtown, that'd be nice. I like that. Connie couldn't, and Connie, there's Ernest, but there's you. I can't ask any other questions, answer any others. So you couldn't buy GBUX on Friday. That's really interesting. It trades by appointment. They have 2.4 million shares reportedly naked short, a little over 1 million in the float. Great news, non-dilutive news. And you couldn't buy it on Friday. I think GBUX might be fun to watch tomorrow. I think this is great strategy, Bill. I think trading some gold for silver, I would pull the trigger on that all day long. At some point, silver will never be $40 again, or $50 or $60. Silver is the most mispriced asset in the world, other than Lauren Sanchez, Kim Kardashian. Well, she's not priced right now. Water, clean water is mispriced, and oil's mispriced. But those water and oil's not going to change overnight. Silver could change overnight, and maybe platinum and palladium. I think gold could change overnight. Gold could be $8,000 in the morning. They're gonna hang me in the morning. They're gonna hang me in the morning before the night is done. I can't find the lyrics. Anyway, just stuck with one line. They're gonna hang me in the morning. Thinking of buying Railtown, I would. Been buying rail since December 9. That's great. I made a little money in Finger, but no longer like them. NIXX, RLAIF, way better. Risk reward. That's fair enough. It's a market. Everybody's entitled to make it. I agree that there's 3 or 4 different forms of investing. There's speculation, which can be broken down into trading or day trading. I'm not a big fan of either one of those. There's also knowing a story, buying it while no one wants it, and waiting for it to move and then just getting out. I like that. And then there's investing, longer term horizon. And I think Finger is a buy the dip, sell the rip type stock until it gets to 220, 240, and it could go higher. I think NIXX is a double, but NIXX has also had some problems getting up out of the ditch, but I think NIXX is a double in the short run, and it could be much higher longer term. But I have some questions about the execution and about the fact that the shorts already know their strategy. They invited the shorts in on their strategy, and it's a huge short position left over from recruiter.com. But I think Nixie has it has a reasonable story to get to $20, and it could happen all very, very quickly. Nixie is sexy again. High risk. So I think there's something in Nixie for the day trader, the speculator, and the investor. And I think Railtown, I can't believe it's this cheap. I think Railtown has been kept cheap, unless I'm missing something, because in Canada, which is a small marketplace compared to the United States, the big boys and the big investors must all have accounts at Canaccord, and so they cannot run the risk of buying this stock during the quiet period. So I think when the quiet period's over, you're going to get a step up in the price of Railtown to wherever it should start from. I answered that. They're good questions. I think the 750 value is over. See, Steve, I'm sorry. All those messages are gone, so I'm sorry. Next trip is interesting. Yeah, it's interesting. All that reading of Anson, does that mean Roth will be held to account for the deal with Finger? No, no. Roth facilitated a trade, and I think Finger had to do the deal. And that's where the criminals have the leverage. It would have been much better to do it at 250 down from 270. And I think if Martin Shen had a bit of time, he could have raised money from us, from Wales at that price. But given the choice he had with the gun to his head, I think he did a good job getting it off at $1.50. Doesn't mean criminal action didn't happen on behalf of Anson Funds, but I think $1.50 allowed Finger to stay in the game with C2 contracts. And if they hadn't done it, the Chinese New Year would have gone by. And I bet the stock would be 35, 40 cents right now. So I think I really think he showed leadership, and he made a tough decision, but he did it, he acted, and that's all you can ask for. And I think it sets Finger Motion up for much higher prices. I tried that symbol on Weibo. I don't know what Weibo is, Schwab and Mumu. Well, I think Weibo or whatever that is and Moom are both crappy companies just set up to provide an outlet for the corruption that goes on in the markets. They admitted in their first money raises, they're just selling fractional shares. There is no such thing as a fractional share. That means you're trusting them to split out their street name shares honestly. Do you really believe they're going to do that? They get their money from the big brokerage firms and the institutional. They're just con jobs. Schwab, I think, is one of the companies in trouble in MMTLP, MMAT, and I think they were one of the companies in trouble when Finger was squeezing, in my judgment, when GTII was squeezing, in my judgment. So it doesn't surprise me. It's a good sign, Ernest, that you couldn't buy, not for you, but for the rest of us, that maybe GBUX is in trouble. NASDAQ always enables the reverse split. Adina Friedman would rather split the boards of the companies that have the privilege to be in her presence into DEI categories. She'd rather focus on that than the damage done by reverse splits. One thing she could do, take away. Once you've achieved NASDAQ accreditation, and it's an achievement, takes a lot of hard work, take away that dollar maintenance requirement. Just take it away for a period, for the remainder of her term. Just take it away. But she has no leadership. She's just there because she's a woman. There's plenty of women out there that I admire that have leadership, that have done things, but Adina Friedman is not one of them. GBUX goes first. I think GBUX. I don't know what you mean about going first, but I think GBUX gives you at least 3x, but I think GBUX could give you 10x first. I think Finger gives you what's going to be a period of time where the stock rallies and pulls back, rallies and pulls back, rallies and pull back. And then once Finger gets through sort of 240, it might have to get through $3. You could get a big move in Finger, and who knows, it could be short covering. But I think that takes weeks to happen, and I think GBUX could happen in the next week. But I mean, it could take longer. I mean, you're asking me to make a prediction. I think GBUX could go next week or 2 weeks. Finger, it's going to be a very profitable fight for the next 2, 3, 4 weeks, and then it can break out. There is something with Finger that Ham has alluded to, with a big investor, with big corporate participation. Though, if those things come, which is unknowable in terms of timing, that could change the story all night. But I think just what I know right now, as long as your goes first is a more modest number, I think it's GBUX. If you're talking about a short squeeze, I don't know how to tell you which one could squeeze first or when. Believe it or not, GBUX could be a short squeeze. It could be a short squeeze. But of the two, now, Julius, in return for that answer, I think GBUX is the riskiest. And I think tomorrow, the reason why is, what price do you pay? You know, you can buy Finger all day long, I think, for the next week or two, under $2. GBUX could be $10 out of the gate tomorrow, and then you got a tough decision. Do I pay 10, knowing it could pull back to 5 in a sell-off? Because if I pay 10 for GBUX, it could go to 100. Do I buy some GBUX at 10? That's probably what I would do. if I had a certain amount of money allocated, I just go ahead and buy some of it so I can be in it. Because I think GBUX really does have the setup and the great news for a short squeeze. But that's the highest risk call in the world. So I think tomorrow morning I would buy some. Unless it opens down, I would buy it all if it opens down. But if it opens up, which is what I expect, I'd buy some anyway. And then on a pullback, I'd probably just buy the rest on the pullback. All right, I have to watch Djokovic in 10 minutes. You called Finger months ago, and you said it was going to go back to 150. Yeah, thank you. I did say that. It's not about me, though. It's just about the stock is trading like it should. Is there any news on XRP? Haven't you heard? Haven't you heard? The entire management team at XRP went out last night, and they all went swimming for a skinny dip, and they all drowned. I think silver will double before gold. Yeah, both are going to double, I think. But that's thank you, Wayne Wolf. That'll be a thought I'll finish on. We really have to stop thinking of our wealth in dollar terms. That's what I think. I think you still have, because of Trump, probably, because of credulity, because of war, possibly because oil prices have remained stable. I think we have more time that the dollar has credible value. But over this next period of time, whether it's 6 months, 5 years, 10 years, who knows? It's very hard to make predictions about the future. But over the next period of time, we have to wean ourselves off of measuring our net worth and our worth in dollar terms. I think it's going to come down to the home you own, where you live. Are you happy where you live? It's going to be down to how's your family, friends, spiritual, if that matters, your human life. How is that going? It's going to be cash flows, I think, and cash flows from, if you're lucky, from more than one source. Is your job something that's going to have value? If you're a young person, is your job something that's going to have value in the changed economy? And probably it is. Own assets that have cash flow. Own things you know how to do, all of that. But strictly just going with gold and silver, I think silver is headed to a 1-for-1 ratio with gold in a spike. They'll be moving targets, so it might not happen. But I really think silver will go to 16-to-1 and probably 10-to-1 at a minimum. But it could go 1-for-1 with gold. But how much? And gold could go to $100,000 an ounce. $100,000 an ounce. But how much of that in the end is going to be just the collapse of the dollar's purchasing power? I don't know. At some point, there's wealth creation, and then there's maintaining wealth, and then it's just about the dollar going down the tubes, which it will. at some point. Unfortunately, I have 6 minutes left, but unfortunately, we have decided to go to war with Iran, it looks like. And Iran is not Saddam Hussein. And I don't know that we won the war against Iraq. Have we won a war since the Soviets helped us win World War II? Have we won a war? I don't know. We've made a show of a lot of wars. We lost our soldiers in Beirut under Reagan. So he attacked that island in the Caribbean. Maybe we won that island in the Caribbean. I forget the name, Grenada. Maybe. But I can't think of a war we've won. But we're not going to win a war against Iran. And in fact, that might be it. Could be it for the world, but it's probably going to be it for the U.S. financial system. So I hope Trump has a bigger strategy in mind than going to war with Iran. If Trump is pissed off at Putin and can't pull off a deal, Putin will win the battle of the ruble versus the dollar or the financial systems. Our markets are corrupt. Our bond market is corrupt. Our investment banking markets are corrupt. We no longer care. We don't care. We just have a few men at the top that want to steal as much of the wealth they can print out of U.S. Treasury as possible before it all goes down. That's where we are. And in that context, your gold and silver and other things. I mean, maybe you buy I don't know, maybe you buy a cornfield, or maybe you buy a car repair, or maybe you buy a settlement company, or maybe you buy a bottling company. I don't know. You buy a organic herb farm. Anyway, whatever you know how to do. For a while, you can buy that with dollars at a nice price. But at some point, I mean, here in DC, you might buy a multi-million-dollar home, and it seems, that's expensive. But if the dollar collapses, that home might, in the future, go for hundreds of millions of dollars, but there'll be no buyers because the dollar has no value. You gotta start seeing your wealth in the assets that you really want to own. Good place to live, safety, family, as many puppy dogs as you can have, children, friends, meaningful life, people that love you, which is hard to find, and something to do. That's something I made up one time when I was drinking with some woman who was telling me about her boyfriend. In fairness, I heard it 25 years later from the husband of a good client of mine. So I knew I was onto something then, but since I was drinking, I wasn't sure that I had actually given good advice. But what we need to lead good lives is we need something to do that we like to do, something to do. Make sure you have that. We need someone to love. Make sure you have that. Healthy love. And you need something to look forward to. Make sure you can do that. And we'll get through it. All right, it's 2:59. I'm going to sign off. I want to go watch Novak Djokovic win his 100th title. And I will point out to you that they cost him at least 7 Grand Slam shots, which I think he would have won many of them. They cost him, COVID cost him a year, all sorts of things. But that he can share the 100 titles wins with Jimmy Connors. I saw his last one, and Federer. Connors has 109, Federer 103. Connors won here in DC. I've never seen Djokovic play in DC. So Connors won a lot of, 500s and 250s. But I want to go see Djokovic win today, 3 o'clock. If Finger doesn't go, oh, it's these nuts. If Finger doesn't go to triple digits by a share by June, I'm jumping off the plane, William, and it's my fault. Oh, really? Really? Well, I don't think I have been clear enough. I don't think finger motion is going to 3 digits by June. Can I be clear about that? I do not think finger motion is going to 3 digits by June. I think GBUX could go to 3 digits by Tuesday. But it might not. I mean, I think it's a total roll of the dice. I think Railtown, I don't think Railtown's going to go to 100 by June. But Railtown could go to, by June? Yeah, Railtown could go to 30 by June. I'm not promising that. So let me be clear, these nuts. I do not think finger motion is going to 3 digits by June. Okay? Thank you for your comment. And you're going to blame me. It shows me that your integrity is as large as your cojones. And with that, I'm going to sign off. I wish everybody a happy Sunday. We'll talk tomorrow. I'm going to go watch The Joker. Peace, love, and happiness. Peace in the world. And happy, how do you say it? Mubarak, Eid Mubarak. Happy Eid to everybody out there. Happy Eid.